if you want to call that a catalyst, I think that was the overlay, basically the air coming out of that reflation type idea. In addition to just, some of the news about uptick in cases globally and things like that. Also, the idea that supply constraints are sort of restraining GDP as opposed to necessarily catalyzing it in the very short term. I think all those things mixing together with the idea, too, that, we've had a record number of companies raise their own earnings guidance for this quarter. And that really more underscores this idea of a peak upward earnings revision moment. That doesn't, again, mean that it's over for cyclicals, but I do think it explains some of the back and forth with the market.
Rob, when you see these record closes, is that a sign to take some profits or not?
Generally when the market reaches a new high, it goes on to reach another new high. So we've been looking at that. Investors are certainly worried about it. Light volumes today, so a lot of movement in exchanging places. But we think that this continued strength in the market is well intact and is warranted.
So what about the reflation value trade that was so dominant for a good part of this year? Is that, Rod, is that over? Or is it just taking a pause?
I think it's taking a little bit of a breather there as everyone assesses the current environment. But we really do think that with a strong economy, with the current bond yields as low as they are, and with great balance sheets, that value stocks will continue to do well, especially because we think that interest rates are going to continue to move their way upwards in the second part of the year. So the value trade is not over. Maybe the rotation into the back to work is done, and people are thinking about what comes next, but we don't think we're done with value.
Shannon, how concerned are you about rate hikes when they arrive? Is it something that will derail this market, or as long as it happens steadily, we can continue to power higher?
I hate to sound naive, but I think that, when you listen to Powell's comments, even the press conference after the changes in the dot plot, he talks about, normalization. And he says when we're ready to normalize policy, it will be fine because the economy will be able to take it. Now, clearly, ahead of that, as we start to talk about the tapering of bond purchases and we start to see potentially some more changes in the dot plot that would move those interest rate hikes up sooner, there could certainly be things that, the market would be concerned about. However, I continue to look at just overall this acceleration of economic growth. We haven't even seen the rest of developed Europe participate in this yet. And I think there's just a long way to go. There's a lot of stimulus, and I don't think that you should underappreciate the amount of stimulus that's been put in the economy. And so I worry a little less about rate hikes in 2023. I worry a little bit more about, the perception that inflation is getting out of control that would result in earlier rate hikes, because I think that's where you're going to get the overreaction of the market.
Yeah, on that, that's going to be a big determining factor on the Fed, on the markets, Mike. David Rosenberg, who is definitely in the transitory camp and actually thinks growth has peaked, says to watch materials, which he says is the market's barometer for inflation, which has rolled over.
It has actually rolled over. A lot of it's the industrial metals and chemicals in there that have, I don't think that that's the verdict, but that's definitely one of the things you can observe about the market's body language, that it's without a doubt less concerned about an overshoot in inflation, whether it's because the Fed kind of says we're on the case or just because the overshoot in commodities has been unwound to a fair degree. And we've just been living with this potential threat for a while. And also, the factors driving it higher, just as the Fed has said, don't seem sustainable. So, yeah.
Rob, we're talking about tech's recent success and the mega caps in particular, with Facebook crossing $1 trillion. What's your positioning within the tech space?
Well, we think that mega cap tech was expensive, and it just got even more expensive today. So we'd like our investors to think about looking at the small and mid cap tech, where we see valuations that are much more attractive. And we think that there's much more room to run in those small and mid-sized tech companies. We like fintech. We still like green tech, which really has had a challenging time this year. But we think that those types of green technologies that will be receive some benefit from infrastructure plan, will receive some benefit from carbon neutral types of strategies. Looking forward, we like small and mid tech, and we think that the mega cap tech names are fully valued at this point in time.
Shepard Smith here. Thanks for watching CNBC on YouTube.